What's good, YouTube? It's your boy Zay, and welcome back to Setup Sunday. Now, I know it's been a couple of weeks, so I apologize for that. However, if you follow me on IG, you are still able to catch some gems. I did 2 Setup Sundays on IG, so if you're not following me on Instagram, definitely follow me on Instagram because if I don't publish on YouTube, more than likely it's on the gram. Now, with that being said, y'all, we are about to kick off June. And so you know what that means. We need to get into some TA. We need to talk about what to expect. Quad witching is around the corner. So, I'm here to try to help you guys get ready, let you know what I see as far as technical levels and far as setups go. So y'all already know, before we jump into it, please make sure you like and subscribe to the channel so that way whenever I do drop a video, you are in the know. And so with that being said, let's go ahead and kick it off.
All right, family. So y'all already know how we like to kick it off. We like to kick it off with the article of the week. And as you can see, the jobs report is going to be the big headliner for the week. Also, please note that Memorial Day Monday, the market is closed, so the market does not open until Tuesday, as well as June is typically a weak month in the market. So that's something that we need to pay attention for. So just a couple of quick highlights before we get to the charts. So some of the key points that they talk about in this article is that, hey, the May jobs report, as we just talked about, is coming out. There is an expectation that 674,000 jobs have been added after last month's disappointing 266,000 ads, where we had analysts talking about they were predicting close to 1 million. So we came in significantly under that. And so their analysts will be looking to see if there's a huge or a big jump or bounce back. Also, just FYI, you can already see that they said, hey, it was a mixed performance in May. As you know, we had that 4 to 5% pullback early in May, and then we slowly regained that about the last 2 weeks of May. And typically, as they said, June can be a pretty weak month. Also, another thing that will be huge in the headlines is the Fed in this upcoming week, especially after another hotter than expected inflation report was released last Friday. So, of course, inflation has been a hot topic in the news, whether it's transitory or not. And so this whole inflation argument it's just going to stick around until we really figure out, is it transitory or not? And we're not expected to really find that out until probably later in the year, because they need time to collect data and figure out, hey, do we need to tweak anything? So this is just going to be something that drags on the market and continues to create volatility. Just some of the other highlights, as you can see, they show a nice graph of year-to-date returns, and basically the Nasdaq has been lagging the S&P 500 as well as the Dow Jones. What else? There's a big event in June, so just note that the Fed meets on June 15th and 16th. Cough, cough. June quad witching is, I believe, June 18th or the 21st. So how ironic that the Fed is going to have a big meeting right before quad witching. So expect some volatility. Hedge yourself, protect yourself, because investors are going to be on edge, wondering what is going to come out of that meeting. And best believe they'll probably be looking to go a little bit of risk off until they get clearance or insurance of, hey, what's the dealio here? So FYI, please note June 15th and 16th, there's a big event. As well as, like we just said, inflation is going to continue to be here. It's going to continue to just stick around until we figure out if it is transitory or not. The next thing you can see here that they go and highlight is the U.S. 10-year Treasury. And as you can see, it's been relatively flat. This is what we want to see from the 10-year U.S. 10-year Treasury, that, hey, it's not running up. No, it's not running up as hot as it was in the beginning of the year. It's kind of tapering off and leveling out. So that's a good thing for the market. Again, if you want to read in depth on this article, it is down in the notes or the description of this video, so you can go in a bunch deeper. Here, they're just talking about, hey, how much liquidity is in the system. As you guys continue to know, the Fed is just pumping money into the system along with all the stimulus that has been passed. So they're like, hey, is this red flags to the market and whatnot? So as you can see, for the week ahead, we have Memorial Day. Like I talked about, the market is closed. Tuesday, manufacturer PMI and ISM manufacturing numbers. These are going to be big, so please pay attention. Then we got Wednesday, we'll have the ADP employment report. That's going to be huge. We've got the Atlanta Fed talking on Wednesday as well. Thursday, a lot of numbers come out Thursday. So this could be a market moving event here on Thursday. And then Friday, of course, you got Jerome Powell talking about central banks and climate change. And then we got the employment numbers Friday at 8:30. So yeah, that's pretty much what to expect this week. Those are going to be the events to kind of watch out for. Just the FYI, typically the first week of June is pretty decent just because of the whole Memorial Day holiday and all of that stuff. So I would not be surprised if we have a good day Tuesday and Wednesday. And we'll actually get into that when we get into the TA in a second. But yeah, that's pretty much the news for the week, y'all, to just take a look into. As I said, this article is down in the description if you want to read in a little bit deeper. So with that being said, what we're going to do now is transition over to our weekly TA. All right, fam. So here we are. As you know, we like to start off with the Nasdaq. So that is the IXIC, the Nasdaq Composite. This is a weekly chart. So as you can see, last week, the Nasdaq did 2.06% in a week. And so I'm actually looking for the momentum to carry through and for us to pretty much go up to about this level right here. So I'll change that color just so we can see. I'm thinking that the Nasdaq will test 14,000 this week. If it holds, is another story. So let's just go in and dig a little bit deeper so that way you can have your upside numbers as well as your downside numbers. So for the Nasdaq, right, looking at where we are on a technical standpoint, upside for the Nasdaq as far as what I would be paying attention to. The first level I would be paying attention to is going to be roughly around this 13,889. So 13,009, if you want to give it a round even number, that's going to be the first level of resistance. If we can get there and hold that, then the next level I'd be looking for us to take on would be 14,044. So again, roughly 14,000, 14,050. If you like even numbers, right? So that's our upside targets. To the downside, if we cannot get through up to our upside targets, first things first is that this 13,748 or 13,750 has to hold. So if we break below that, then more than likely it looks like we're going to probably come down and test this 13,565, which is where our 50-day exponential moving average is, even down to about 13,460, where our 20-day moving average is. So that's going to be, the downside you want to look for. And of course, we do have a small gap up in here on this 13,048 to 13,300. So also be mindful of that. We could come back and try to fill that. If not this week, definitely I'm thinking around quad witching time, we'll probably come down and fill that gap. But yeah, so let me just go ahead and add some levels just so you guys can see that. So again, just to recap, upside numbers, I like 13,900, 13,880 roughly to 14,000. If not, downside numbers, I'm looking for 13,565, give or take, as well as the 13,460 level as well. So that's pretty much, what I'm seeing as far as the Nasdaq goes. So let's go ahead and jump into the Qs, the triple Qs. So same thing here for the triple Qs. Let's go back to a weekly chart just so I can give you guys a full perspective. So again, last week, the Qs did an amazing 2%, went up about $6 or so, went from 329 up to our 333, 334 level. So as you can see, for upside targets that I have, the first level I would be looking for the Qs to get to would be about 336.54. If we can get to this 336.54, 337 level, after that, I will look for us to take on about 339, roughly 340. If we can get through 340, then again, the all-time high is around 342.52. And that is where ultimately upside numbers I will be looking for. To the downside, again, looking for 333 roughly. Let me just go ahead and add one here. Yeah, about 332.56, give or take. If that doesn't hold, then again, we got 329, and below that, it'd be 324. So let me just change it to a daily just so you can get a better perspective, right? So again, just, giving you guys a better, clearer view. So if we can get through this level of resistance here at 336.54, then more than likely we can climb up to about 339.52. If we get through that, then we can get to 342.52 for upside targets. If we get rejected and we're going to the downside, what you want to pay attention to would be the 332.56. If that doesn't hold, then we'll probably be coming down to about 329, which is roughly where our 50-day exponential moving average is. And then we do have our 20-day moving average at 327. So you want to pay attention to that level. Again, I do have 324.76, and I can really adjust that because we do have a gap here. So again, I don't think this gap is probably going to get filled until around quad witching time, but just be mindful that we could possibly come as far as or low as 322 in the upcoming weeks on the triple Qs. So we could go up first and then come back down. That's typically, kind of been the way the market is doing, is they'll take us up to take us down. So just be mindful of these levels when it comes to the triple Qs. So with that being said, we're going to transition into the SPX. So that is the S&P 500 index. So let's look at it again from a weekly perspective here. So if we change it to a weekly chart, as you can see, last week, the S&P 500 did about 1.16% on the week. We finished roughly at 4204, so just above 4200, which is a psychological level. I do think that gives us the momentum to continue going up, right? So when I look at the daily chart, here are the levels I'll be looking for to the upside as well as the downside. So to the upside, what I would like to see us do is get through this 4213. We got rejected multiple times last week, so we can push through that with some volume. We could get through 41213 and push as high as 4239, 4240 roughly. If we can get through 4240, then there's no resistance, and it's just a matter of how high can we go. Just to show you how high we can go and give you guys a realistic target, what I'll do is I'll throw the fib on this bad boy, and based on our fib retracement, we could get to 4255, and after that it's looking at 4308, so pushing 4300. That means the market's going to run really, really hot. So I would be very mindful if we get to those levels, because I don't think they'll hold. And so you might want to actually look to get you some protection when we get up that high. So yeah, so upside levels, get through 4213. That will take us to about 4240. And if we get through 4240, it could be off to the races till we get to about 4300. Now, because 4300 is a psychological number, in the way the market makers been playing this year, I would not be surprised if they only push the market to about 4285 or something like that, just shy of 4300 before bringing it back down. So be mindful of that. Downside numbers that you want to pay attention to. Of course, the first level will be this 4258, 4158, 4160 roughly. That's right where our 20-day moving average is. As you can see, we do have a little bit of a gap up in here. So that's going to bring us about 4226 to 4115. So that falls in line with our 4120, 4110 support levels. And as you can see, the 50-day moving average is right at the 4106. So it's kind of closing in on that gap. And again, as I said, I don't think this gap's going to get filled until around quad witching time. So we could get a nice push going into June because it's the first week of the month. And then after that, the next 2 weeks leading into quad witching, we could kind of see a level off, maybe even a pullback of about 4 to 5%. And just to put that into perspective on the S&P 500, let's just say we did get to about 4289 and we did a 4 to 5% pullback. Just going to show you guys. So 4% puts us right in the gap. And then 5%, if I can drag it down a little bit more. And then 5% brings us at 4070, which is roughly right at the bottom of our Bollinger Band. So it's not out the window that after the first week of June, don't think that we can't see a 4 to 5% pullback in those next 2 weeks. So it puts us right back in relative areas that we know we need to be paying attention to. So that is the S&P 500 upside targets as well as downside targets to pay attention to. So now what we're going to do is we're going to get into our SPY, and see what we should be paying attention to on that. So the SPY, Last week, the SPY did 1.23%. And as you guys can see, we had double rejections here, and it looks like the market does want to push a little bit higher. So what should we be paying attention to, right? So let's go down to a daily chart because this is going to give you guys a better view. So here we are. 420 is a level that has to hold. So this has to hold. If we hold 420, first level we're probably going to try to aim for is 422.57, which is all-time high. If we get through 422.57, again, let me throw the fib on this bad boy for y'all, just so y'all can see potentially where we could be headed. If we get through, say, if we get to 422, or basically the fib is telling us 421.30, the next level to look for would be 425.62, all the way up to 431.18. Those are going to be your upside targets. So let me just throw some lines or levels just so y'all can see that. Boom. And so, yeah, these are going to be upside targets that if we can stay above 420, we'll aim to get to 425. And if it runs hot, we can push as high as 430. So again, if we get up here, get you some protection because I don't think it will hold very long. We could trade sideways a little bit, but more than likely we come back down to 425 or something. To the downside, if we don't hold 420 and SPY decides to come back down, of course, the first level of resistance we want to see hold would be about 417. If 417 can't hold, then more than likely we're coming down to about 415, 414.97, which is where the 20-day moving average is. We do, again, another little gap in there. And as you can see, the 50-day exponential moving average is coming to line up with that gap. And that gap puts us right around 411.59 down to about 410.85. So those are going to be your downside targets. And if 410 goes, and of course, you can see 403.20. And again, y'all, we've been talking about it. Once 403 goes, she's coming back down to about 395. Now, I don't think we'll see all that action play out as far as anytime soon. I think quad witching will probably bring us back down just to fill this gap. And then ultimately, we really won't look to start closing this until about September's quad. And I think that'll be the correction from hell. Not to scare anybody, but y'all have seen, if you go check out the May 2nd episode, I said we go as high as probably maybe 4,400, and then we'll correct down to about 3,800. And that's ain't going to be pretty. So get ready. So that is the upside downside targets for the SPY. With that being said, what we'll do now is transition into the DIA, aka the Dow Jones Index. So looking at the Dow Jones, let's go to the weekly. As you can see, again, the Dow Jones Index did do about 1% last week, double rejection here. So it looks like it wants to continue pushing. All right, so as you can see, the upside level that I have here is 350. And if we get above 350, the top of the Bollinger Band puts us at 355.73. So those are upside targets. To the downside, we want to see 341.59 hold. If that doesn't hold, then we'll come down to roughly around 337. And if we break 337, another gap up in here could bring us down to about 330 on the Dow Jones. So let's look at it from a daily perspective, just so you can get a better view. As you can see, we have been trending up, but it's been selling as we've been going up. So it's kind of just been a slow drag up. So I'm not very confident. As y'all know, I've been bearish on the Dow Jones, which has proven me wrong because it continues to go up. But I just think it's really ran too far. And eventually, I think the correction is coming to the Dow Jones. It's just a matter of when. And it could be June quad witching. We'll see. So again, you have your target. So the Dow Jones, if we can get above this 346, then again, you can see based on that week here, it could push up to about 350. If we get through 350, 355, looks like we probably don't have enough momentum to get through 50, but we'll see. So just know 350 and 355 downside targets though. If the Dow Jones decides to retreat, watch out for 342. Like I said, 342, 341. And here's our 50-day moving average right at our 337.28. And if that gives way, look at this gap up in here. More than likely, that's going to get filled and bring us down to about 336. And then it's just, more downside. So For the DIA, that is what I will be paying attention to in these upcoming weeks. So with that, let's get into our US 10-year treasury. As we said, it is tapering off. It is leveling out. So let's go see what it looks like on the chart perspective. So when we get to our weekly, you guys know in a couple of previous episodes, I did say that I believe we were trying to work our way down to this support area, which is about 1.49. And as you can see, the first week of May, we actually came down and touched it, but we got pushed back up. It faced some rejection. So let me just zoom in. So you can see we pushed down and then we got pushed back up. Then we tried to go up and it got pushed down. So it really just looks like the US 10-year treasury is just consolidating. And we'll probably go into this consolidation mode for quite some time. Maybe this could last, over the next couple of weeks, and then eventually we'll probably get a break to the upside because I do think the US 10-year treasury is trending up. So as far as what to pay attention to, it's trading in a pretty simple zone. So as high as it can go, I will just add a new level. So you want to watch out for about 1.68, 1.62, down to 1.56 and our 1.5 or 1.49. So these levels have pretty much remained steady since I've been doing setup Sundays. I don't see this changing. So that is what I would be paying attention to. And if you can see, the Bollinger Band is starting to tighten up, meaning the trading range is getting narrow and narrow because it is consolidating. So that is what I'll be paying attention to for the US 10-year treasury. This is what it looks like on a day chart. So it looks like it ended the week with a red candle. So it could try to, come down to about 1.5. Again, maybe even come test this 1.49 again. Or if it decides to bounce up, 1.62, and then looking to get to 1.68. So the US 10-year treasury is starting to become very predictable in its movement. So just keep an eye on that. Getting into the VIX. So the VIX, look at the VIX. So this is a day chart for the VIX, right? As you can see, this was some volatility that we had early in May, sell in May, go away. And now it started to cool off as we go into June. Now, here's the issue. The last time we got down this low, you see what happened. We went into this whole consolidation, and then we had the big shakeout. So to me, what this is saying is that we could see a similar setup or trend in the upcoming weeks, especially knowing quad witching is around the corner, right? So we could push down to maybe this 15.29 or roughly. So actually, let me give you exact levels. So the first level is 16.18, and then we go down to 15.29. If that happens, more than likely, we would see the SPY in the market reach new all-time highs. However, that is a signal that we could be looking for a reversal or a pullback. When the market makes new all-time highs, it typically retreats or pulls back. So if we do see the VIX get down to these levels, I would be looking to get protection because it could be in for a very, very violent bounce, which means, hey, a shakeout happens. Or we could see some swelling or consolidation like we see here. So downside numbers is 16.18, 15.29, upside 17.27. If we get through that, then again, the infamous 18.8 is our level of resistance. And if we get through that, then 19.51 up to 20, where the 50-day moving average and our 20-day moving average is. And if they really want to scare people, they could push to the 200-day moving average, which is about 22 on the VIX. And if you get above 20 on the VIX, that means the market is going into correction. So that's what you want to pay attention to when it comes to the VIX. Definitely watch out. We've had some really good momentum due to the downside. And if you look at the weekly, this is a hell of a bearish candle right here. So again, when you look at it from a weekly perspective, we could probably push down and then come back up. So, might be like a little doji that we get here. And then after that, we'll get two green weeks, something like this, as we go into quad witching. So that's kind of what I'll be watching for the VIX. As you can see, we're still toying in the gap area from back in 2020, which means the market's just normalizing. So as long as we stay on a 20, we're getting back to normal market conditions, but this is something to watch out for and pay attention to. All right. So now that we've gotten through the VIX, let's hit our crypto. Let's do Bitcoin and Ethereum. So looking at Bitcoin's chart, this is a weekly chart on Bitcoin. Damn, Bitcoin, she dropping like it's hot. So Bitcoin, we are currently at 35,244, as you can see. And I'm gonna be honest with you guys. I see Bitcoin definitely coming down to about 28,760. So the rough number when I went back and checked was 28.8 even number. Y'all know Bitcoin like even number. So $28,800 even will be the first level of support that I'll be watching for it to get to. If 28.8 gives through or breaks, then I see the larger target coming down to about 19,164. So just under 20K. And remember, I've been calling for a Bitcoin going back to 20K since January. Check my tweets. So yeah, I really still feel like Bitcoin is on its way to 20K, maybe even lower than 20K, but I really don't think we go no lower than 20K. Now I will say this doji does set us up for a dead cat bounce. So I would not be surprised if Bitcoin has a good first week headed into June, and it could go back and test this 38,070 level all the way up to about 45K. And if we get to 45K, I'd be looking for rejection there, or probably going like a little bit of a holding pattern before it decides to break back down and head to 28 and 19. So definitely keeping an eye on Bitcoin. I don't think this buying was strong enough to continue the momentum up. However, you know, we just have to monitor the situation and see what happens. So when it comes to Bitcoin, what I will be paying attention to is see if we can get back above 38. If we can get back above 38, it probably can push to about 45, maybe even 50K. But then from there, I think we will see some rejection. And then, like I said, downside targets to pay attention to would be 28,800 all the way down to 19,164. And if I change it to a day chart, you can see that Bitcoin is on a vicious downtrend. And we're pretty close to getting that death cross. When this 50-day moves over this 200-day, you're going to see a red X, and that means we are now, you know, in bear territory pretty much. So Bitcoin is look like it's fighting, is trying to hold this 38, but I just don't think we have enough buyer support at this level. You know, eventually it'll probably push it up just so they can get out before it does another flush out to the downside. So and you can see our 20-day moving average has already crossed the 200-day moving average, which is not a good thing. So that's Bitcoin for you guys. If you've been tracking along with Setup Sunday, I think early in May, I'll walk through how I, you know, could see Bitcoin coming to 20K by like around July or so. And so far we on track, baby. And so that's Bitcoin. Let's look at Ethereum, my boo Ethereum, man. So y'all remember, yo, with Ethereum, we tracked this thing all the way to the upside. And then look at that. In a matter of 2 weeks, that thing gave back damn near 50%. So we made an all-time high at 4,300. And then from there, we just kind of blew through all the levels that we set. And it came all the way back down to our 1,700 level. This is when we first started tracking Ethereum. That was the price. And so it basically shot up and it retraced. So this is why you don't go chasing. For Ethereum, though, as we can see from the chart on a weekly perspective, it did get a bounce all the way back up to roughly 20, about, let's just say 2,900 even, and tried to get to 3K, but then we got major rejection, which tells me that it looks like Ethereum has some more downside. So what I'll be paying attention to, as you can see from my levels, is 2,062, roughly 2,050. 1928, and then all the way back down to our infamous 1,700. Now the 50-day moving average is hanging out here at 1,396, so roughly 1,400. I want to see Ethereum hold that. I don't want to see Ethereum go no lower than 1,400, because if it breaks 1,400, realistically, we could see a $1,000 Ethereum. And if Ethereum gets to $1,000, I'm loading up, straight up, loading up. So that's Ethereum. If I change it to a day chart for y'all, just so you can get a little bit more of a better perspective, as you can see, the 20-day moving average has crossed the 50-day moving average. Now our 50-day is starting to point down, and our 200-day is relatively flat, which gives me the indication that I think maybe Ethereum just kind of consolidates between 3K and this 2K, which will be fine. I'll take that. And then eventually we can kind of go get back on our uptrend. So that's what I'll be paying attention to for Ethereum as far as levels. And as you can see, we actually are, looks like it's setting up to get 2 dojis here. Usually when you get this green one, you can get another like push to the upside. So I would love to see Ethereum get back to about 2550 and then push back to 3K. And if we can push through 3K, ultimately I can see us getting back to 3,300, which is right at the top of the Bollinger Band. And as you can see, the bands are starting to tighten up. So looks like we might go into a nice consolidation for Ethereum. And so those are our charts for the week, guys. Those are our levels for the week. That's what we should be paying attention to. Usually I have a lesson of the week. And so what I want to actually do is talk about quad witching. All right. So quad witching, June quad witching, what should we expect? So I'm going to go through our main indices and talk about the type of pullback we could expect to see. So if I just go to a weekly chart, because this is how I like to look at things, week to week perspective. Here's how I can see things playing out. Again, just my personal opinion, you know, drop it in the comments if you see something else, or if you don't think it could happen that way. Hey, it's all subjective. But what I do see happening is that this week in June, we will more than likely push to about 14,000. I don't know if we hold. Maybe we do hold, right? So that would give us the 3 white soldiers essentially, right? So we get another green candle that puts us here, right? And then from here, right? And just so you can see, if we end the week at 13 or 14,000, and then I draw here the next 2 weeks, right? Because quad witching is around this week right here, June 14th. It's going to be the end of that week. And if I do a 4% pullback, look where it puts us. Right at 13,460, and it fills this gap. Now, of course, you know, they're going to test it. So if we test it, we actually could do where we open, and that puts us at 4.75%, which would put us at about 13,050. So quad witching, I'm looking for a small pullback on the Nasdaq. However, once we get this pullback and we fill this gap, and I've shared it, that there are analysts who believe we could continue to run hot through the summer, and that by mid-July, we could actually see the S&P 500 at 4,400. Now, if that's going to happen, the Nasdaq has to participate. So therefore, if we calculate a bounce of about 8% to mid-July, just so y'all can see, that will put the Nasdaq, and I'm just going to delete that. That will put the Nasdaq at roughly 14,400. 14,400. That would be new all-time highs for the Nasdaq, and that puts us there by mid-July. So pullback for a hell of a bounce coming out of June into July. The seasonality is there, and a lot of things are lining up for us to actually see this play out. So that's just my perspective, right? So that is how I see the Nasdaq playing out over these next couple of weeks, right? Now, let me get into the S&P 500. Same thing for the S&P 500. I know I got hella levels marked, but you know, some of it's for scalping, day trading, and stuff like that. So when we look at the S&P 500, same scenario. Now, if we get the Nasdaq pushing, then that means we could see the Nasdaq roughly go up to, let's just say it does get to this, 4,300 area, right? Let's just say we get to 4,300. That means the Nasdaq from where we are, the S&P 500 from where we are this week alone only needs to do about 2.5%. 2.5%. So if it runs high and gets 2.5%, it puts us at about 4,300. Now, let's look at if we end this week at 4,300 roughly, and we get a, say, 4 to 5% pullback from this level over the next 2 weeks, right? So that brings us to June 14th. And if I bring it down, let me just make sure y'all can see that percentage, right? You see that percentage, 4.5%? Look where that puts us. It puts us in that gap area that we talked about. So if I change it back to a day chart, you can see better that it puts us in the gap. 4.5% pullback on the S&P 500 brings us right down to 4115, 4120, right where we're going to we'll probably meet a good amount of support here. All right. Then again, after quad wishing, let's just say, for instance, we get a 8% bounce to the middle of July. So actually, I need to change my graph back to a weekly so I could do this a little bit easier. There we go. So if I go to the middle of July, which is about July 19th, and 8%. Oh, baby. Let me just delete this because I hate this box in the way. And drag that up to about 8%. Boom. 8% puts us well above the 4,400 level. I mean, it actually runs us really, really hot. So we may not even get the whole 8% bounce. But if we just get 7% of a bounce, it puts us at 4,400. All right. And so, again, that's just my perspective based on what I see from the market. I see two huge rejections. So it's not ready to come fill this gap yet. So if it pushes us up to, say, 4,400 by mid-July, then that sets us up for what I said, a correction from hell, because we'll probably trade sideways, even flat, and come back down from August through September. Now, let's just think about how long corrections have been lasting in this market. If we just say from about mid-July, we kind of, trade flat or trade in a range. Overall, if I go to where September quad witching is, which is right up in here, and if I do go down and fill this gap, and again, I'm gonna delete that so y'all can see. Again, over 56 days, that'd be roughly a 9% pullback. So to go from 4,400 down to fill in this gap, that's only 9%. So we get a real correction, which is about 10%, 10.5%. That brings us right to my level of 39.42 by September. Again, that's why I said a correction from hell, because that is going to feel very, very bad. So you need to get your protection ready, get your puts ready, do what you need to do, because we have to fill this gap. And if it don't get filled during June quad witching, it's getting filled September. Please believe that. And so that's the SPX, right? So let's look at the Dow to kind of finish it off. So the Dow, or the DIA ETF. So as I look at this one, though, this is the one that kind of is a little bit different for me. So let's just say from a weekly perspective, the Dow has enough juice to do 3% in a week. So we bounce up to this 356 to the top of this Bollinger Band. From here, if we do a 5% pullback to June, that brings us roughly to our 337 area. Now, the way it's shaping up, we're probably going to meet the 20-day moving average here. So I wouldn't be surprised to see the Dow do about 5% pullback, right? However, because the Dow has been running a little bit longer, I would actually expect to see the Dow do a little bit deeper correction and kind of fill this gap, which would put us around 330. So that's only about 7%. It's not a full correction. It's just a heavy pullback. From here, we could see the Dow then bounce, right, mid-July, and maybe I'd give it usually you do about half of what you lose. So to be on the safe side, I may say maybe 11.5%, since this was a 7% drop. Really, I should be doing about 14, but I don't know if we have enough strength to do that. And I want to be conservative. So we could see the Dow Jones, or the DIA, bounce to roughly maybe 370 by the summer, mid-summer. And then from here, this is when the Dow is going to have a serious correction, because from here, let's just say we do 15%, because I do think we need to come back down to about this 300 level or so. That put us at about 17%. And actually, let me go line this up perfectly. Boom. That's where September quad witching is. So if I get rid of that, you can see a 16. This would be a deep correction. Most corrections are about 10 to 19%. So it's not off base to say, hey, we can see a 16 to 17% correction from 370 down to about 306. And if they really want to push it, then we could even get to 296. And that will put us right at 19% of a pullback. Now, I don't think the Nasdaq will correct as heavy as the Dow, because the Nasdaq had its correction early in March. But ultimately, those are the things that I could see that will lead to the S&P going from 4,400 all the way down to 3,800. So again, I like to give you guys a full perspective or a full roadmap so you can be prepared when things start to play out. Now, what are the catalysts that are going to lead to these things? We talked about it earlier. Inflation. Be prepared to hear the Fed talking about tapering, meaning they're not going to be buying as much assets on a monthly basis. When that happens, the market is going to be spooked. So as soon as the Fed starts talking about tapering, asset buybacks and stuff like that, best believe the market is going to be looking to come down and correct from where we are. As well as, like we said, inflation talk. There's still going to be some policy and legislative things that could possibly come out. And, of course, the media loves to make up catalysts. So whether Elon drops a tweet or something like that, who knows, right? So, but because we are prepared from a technical standpoint of the levels to watch out for, just let the catalyst come to you and be like, hey, oh, well, that was the catalyst that they wanted to use to push us down to particular said levels. You see what I'm saying? So that's kind of what I'm looking for. That's what I'll be watching for. Again, based on this info, you can kind of use this to formulate a dope trading plan, as well as you can, double check my numbers, compare them to yours and what you see. And so with that being said, guys, that is Setup Sunday for May 30th, going into June. We kicking off June. I would just wish you all happy trading. And again, drop your comments and leave some feedback based on the TA that you have seen for this week. And with that being said, we're gonna go ahead and close out the video.
All right, fam. So as you can see, we got a lot to look forward to heading into June. Hopefully, I've helped you guys be prepared what to look for. Again, if you like this video, don't forget to press that like button as well as subscribe to the channel so when I drop next week's episode, you are in the know. And as usual, before we end it off, y'all already know, happy Memorial Day weekend. Stay blessed and peace out.
Run it up, run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building. Who else but us?